Hey guys, and welcome to the fourth day of uh, Daily Dose of Finance. Will be part 4, yes. Today I'm filming it a little bit earlier, so the market in the US is not open yet. So I just wanted to look at Novo Nordisk. Of course, it's on Nasdaq, but it looks kind of nice. I think like price to sales hasn't been this low since 2020. So, and it still has about 20% EPS growth a year for at least the next couple of years. And it also has about 15% average, 15 up towards 20 in revenue growth, as well as it being a PE for PE of 17 now and trailing down to like 13 in 2027, which is pretty nice. I'm gonna start doing a worksheet as I did on the stream yesterday, starting to with Value Pig, and get everything set up and yeah, how it worked for me. So today we do the second part for the Peter Lynch video, because I think the one that we started to watch yesterday was really good. It had a lot of good information in it, where we talked about like great companies like Novo Nordisk. Everybody was saying, oh, if it dips under a certain amount, you should buy it, but a lot of people got trapped, like in AMD as well, and it was just, kept on dipping because it was hyped up. It went really crazy, did really well, but right now it looks great. Well, looks better. So we're gonna go into the Peter Lynch video and see you there.
Importance of management. Management is the single most important thing in a company. But for an outsider to know great management versus good management versus terrific management versus average management, tough to do. Tough to do. Because you only get an hour at people, sometimes a half an hour. And how do you know what decisions they didn't make? A lot of great companies have been made because the company didn't make an acquisition. They didn't get rid of the division. They don't put in the annual report, we didn't get rid of the tubing division. You don't hear about that. Somebody made a brilliant decision, we're going to hold on to that thing, we're going to fix it, and it's doing great. Now, they might be doing great because some management 8 years ago did it right, or some did something right 5 years ago. That person isn't there anymore. Or they didn't make any acquisitions, or they expanded at the right time. So knowing what they can add to it, it's the single most important thing, very hard to measure. I've always said, I'd like to have a company any fool can run, because eventually one will. And you really want to do that. When I bought Toys R Us, they had the formula right. Any 4 people in this room and me could have run Toys R Us. We wouldn't have done as well as they did. They're spectacular. But for the next 15 years, we had no competition, we had a great formula, we could have rolled with it. They probably would have done 3 times as good. They were the frosting on the cake, but they had the formula right, no competition, the department stores know what they're doing, there was no copycats, and they were going to just roll for the next 25 years. Same with Circuit City. So I want the story to be solid. If management can add anything on top of it, that's great. I want to buy the story. Assume management leaves the next day, and they're replaced by the next generation. That's fine with me. If management can add something to it, that's great. I'm not going to buy it because people say they have great management. Because you'll notice, great management is always attached to stocks been up the last 8 years. You ever notice that? Because I looked at Reynolds Metals. I used to follow Reynolds Metals. The stock has had the same person run it for like 30 years. When the aluminum was tight, they'd say Reynolds Metals has great management. Aluminum going oversupply, these people are idiots. Then aluminum get tight, they say these people are terrific. I mean, it all to do with the price of aluminum. And they keep rating the management by how the stock's doing. It's very hard to measure management. It'd be wonderful to do. If you could spend months with them, really see them in action, then you know, but you don't really get that chance. Be flexible. People have all these biases, all these prejudices. They want to buy high growth industries, they won't buy financial companies, they won't buy savings and loans, they won't buy companies that start with the letter R. I mean, there's all these rules. They all hurt you. There are great stocks everywhere. There are stocks that are near bankruptcy, stocks in bankruptcies, stocks about to go in bankruptcy. There are companies on the new high list that are attractive. There's companies on the new low list. They're all over the place. They're in growth industries, non-growth industries. Don't cut yourself off to one segment. People have way too many prejudices, too many biases. And I always thought of it, I don't know if the women in the audience see this many times, but I always thought of these buy lists at some institutions. We don't have this, the fidelity. They have these buy lists. I think Kmart got on some of these companies' buy lists 3 years ago. You know, with Microsoft may get on it about 12 years from now, but they have these buy lists. And I always thought of the buy list is, you know, when you buy a new shirt, you ever look in the pocket and you get inspected by 6 or inspected by 8? Do you ever see those numbers? I mean, I always wondered about that. I always think of those buy lists at those institutions, so I see that inspected by 6 and inspected by 8. In fact, I'm absolutely, if somebody call me, you could do it any time of day, has anybody ever got a shirt inspected by 1? I mean, do they retire these numbers? They have a meeting. I've never had a shirt inspected by 1 or by 2. I think they must they raise their numbers in a meeting up to the rafters. But I always think every time I get that number in the shirt, I think of these people working off a buy list of rapidly growing companies, only they have unit growth rate of X or 6X or whatever the number is. It doesn't work. Another thing about it is math and the kind of math you need to do this. I don't use a computer. I don't have a computer. I really was doing great math. I remember 7 times 7 was 41, and 9 times 9 is 81, and you know, 12 times 12, I think it was 144. So it was some big number. I had that one down cold. And I said, this is great. I love this stuff. And the barge left St. Louis going at 8 miles an hour, and the train left Pittsburgh. And, this stuff is easy. I remember one day, I think it was 9th grade, it was a grim day. Somebody introduced cosine. God, that day, I mean, remember cosine? I mean, has anybody used cosine the last couple of years? I mean, let's have a show of hands. How many of you have used cosine the last 6 months? But I remember tangent and cotangent. Why would you want to know about tangent? And then remember the area under the curve. I mean, remember that crazy calculus area under the curve? I mean, what the hell would you want to measure area under the curve for? You know, that is such garbage. You know, you don't need this for the stock market. If you can add 8 and 8 and get fairly close to 16, that's all you need. You know, you say 400 million in debt, no equity, no cash, losing money, forget it. You know, they get 300 million in cash, no debt, 200 million in net worth. They're losing 10 million a quarter, but they'll be around. That's all you need. You have to get, that's all you need. That is not that hard. If you made it through 5th grade math, you can handle this stuff. And I had a roommate in the Army, and it's a story I always remember. He was talking about, he went to this very good school in the South that I won't tell you the name of it, but it's in Atlanta, and it rhymes with Roger Reck. And they had this, my hero at the school was a very good football player. This is my friend, my roommate, telling me the story about this guy. He was a freshman at this great school. And he'd go to the line of scrimmage, and they'd change the play. He couldn't figure this out. You know, I don't know if you realize how complicated football is. Half the plays are changed at the line of scrimmage. It's about 300 plays. You go there, thinking it's a run to the right. It turns out it's a screen pass to the left, or it's a draw. It's all the blocking assignments have changed. All the passing different. You have to instantly think, uh-oh, new play. What do I do in this new play? Just like that, and do it. He could not handle these deals. He says, give me the ball, I'll tote it. And he'd go for about 8 yards. He was really good at this. Now, this is not why he's my hero. The reason he's my hero, in a classroom about this size, his freshman year, he asked the question, does X always equal 7? Now, he never made it to the second semester. He never made it to the varsity. He never made the NFL because that damn X, he never could figure out X, you know. Now, I always thought at the UN, they could resolve what the hell X equaled. You know, they could say, if it's 247 and a quarter, you know, they just finally resolve what X was. We could save all this time and do something useful, you know. You don't need it in the stock market. But,
Welcome back. I think that was a great video from him, saying that when it comes to management, you want to own a company that is that can run with not great management. Like, everybody can run this company because it's so great. And then when you have great management, this is where you have the icing on the cake. So I think that regard was really, really good. They're also looking to the simplicity of the stock market, that kind of stuff. Like it's not algebra. It's not about finding out the value. Well, it's kind of finding the value of the stock, of course, but it's not that hard to see if a company has maybe a billion in debt and no cash. That is really hard. But if it has, for example, 2 billion in cash, almost no debt, or maybe just 1 million in debt, and the company is it just is in such much better standing in that sense. And that's why I kind of pulled up Snapchat. It's not the greatest. It has about 4.5 billion or so in debt, and about 3.5 billion in cash, and it's kind of beat down right now, right? And it has a future EPS growth of about, what was it, like almost 50% for the next coming years. PE that is quite good, and also a revenue growth of about 10%. So I think it's great. I also did 3D print this for the stock today, and that's why we're also looking at it. So it looks kind of beat down. It did have a huge peak in 21 by Corona, and then it fell down so heavily and under the 1,000 day. We kind of have this arrows we have on the chart is a Python script that we made in the Discord, which says that if we are outside the 50 Bollinger Bands, and at the same time we have a dip under 30 on the RSI, we will get the indicator for it. So it looks like it might be a good indicator to kind of scrape the stock off the floor. But yeah, so I think that's enough for the video today. I think we'll do a part 3 for the Peter Lynch tomorrow. And yeah, I hope you have a great day.